Hello friends, let's talk about Amber Enterprises, a company that most people know as the backbone for India's air conditioner industry. They make parts and assemble ACs for all the big brands you see in stores. Let's start with sales. 10 years ago, Amber sales were 973 crore. Now, sales have soared to 11,021 crore for the latest year, a huge jump, working out to 23% growth per year on average over a decade. Looking at just the past 3 years, growth is even faster, 33% per year. And the latest year alone showed a whopping 48% rise in sales. So, this is truly a high growth company, riding India's big demand for appliances. Now, let's look at expenses. Back in 2014, expenses were 899 crore. Today, they have grown to 10,228 crore. Most of their spending is on materials, about 82 to 85% each year, since Amber buys all the parts needed to build ACs. Manufacturing, staff cost, and other expenses are much smaller, never about 10% of the total combined. So, growth is rapid but well managed. Cost rise as sales rise, but no major shocks. Now, let's look at operating profit. A decade ago, operating profit was 74 crore. Now it is 793 crore. Amber's operating margin is about 7% lately. So for every 100 rupees in sales, 7 rupees is left after direct cost. That's a strong number for a manufacturer, where margins are typically not as high as in services or software. Last year, Amber made 83 crore in other income. This is from investments, small side businesses, or even FX gains, and acts as a nice bonus but doesn't drive profitability. As Amber expands, they borrow, so interest costs came to 220 crore this year. The debt to equity ratio is under 1, meaning they are not over leveraged but do use some debt to fuel growth. Depreciation cost was 235 crore last year, reflecting the investment in plants and machines wearing out over time. Now let's look at net profit. Net profit was just 22 crore 10 years ago. Now, after all cost, taxes, and interest, profit has shot up to 282 crore this year. That is a 24% annual growth over the last decade, but an unbelievable 72% jump in the past year, showing how strong recent growth has been. Earnings per share grew from 9.96 rupees to 81.29 rupees in a decade. Fantastic for shareholders who stayed the course. Return on equity is 11% and return on capital employed is 14.5%. Healthy for a manufacturer. Amber pays no regular dividend, focusing instead on reinvesting for more growth. So, overall, Amber Enterprises is a high growth story right at the heart of India's air conditioning and consumer durables boom. Sales and profits are shooting up, costs are controlled, profits are rising fast, and the business is using debt carefully to scale. If you want exposure to a business powering India's warming climate and growing middle class, Amber Enterprises is one for the exciting long-term list. If you found this clear breakdown helpful, subscribe to Wealth Growth Club and let me know which company you want next.